Okay, I'm back. Thank you very much. Before we begin the presentation, can we just do a quick little sound check and a video check? If you can hear me okay, if you can see me okay, if you could please raise your hand. There's a little button at the bottom here that allows you to raise your hand. That will tell me that you can hear me okay, there's no echo, and the video quality is okay. Perfect. Perfect. Thank you so much. I appreciate it. Thank you for joining me once again. If you don't know me, my name is Raza Khan. I am the Chief Investment Officer and co-founder here at Qila Capital. Our philosophy at Qila Capital is to be a fortress for wealth preservation. The word Qila is a four-letter word in many Eastern languages that means fortress or fortification. It's a military term actually, and it's in many languages the same word is found, whether it's Turkish, Persian, Hindi, Urdu, Arabic, a lot of the Middle Eastern and South Asian languages. So we felt like it was a perfect word that describes our philosophy towards investments, and that's why we're here today. So I'm very excited to share with you what's happening in the world of hospitality. We do have some experts here also that are listening to the call, and I must admit that they are bigger experts in hospitality than I am. So I'm going to try not to say something controversial that you don't already know. So we're going to kick it off. What I'm going to do is I'm going to share my screen, and we will continue from there. Okay, I am opening my screen. Okay, I'm going to start sharing my screen. If you can see my screen, please raise your hand in about 1 second. Here we go. Can you see my screen? Fantastic. Okay. Thank you for raising the hands. Gives me some feedback. Thank you very much. Let's kick it off. So today's topic was supposed to be an overview of what's happening in the market and where we stand in 2026 and what happened in 2025. But we had some exciting updates that just took place yesterday. We have updated our fund documents and our presentations. Some good news. So as we were nearing the finish line, so we made some positive changes, and this call is going to be a little bit of both. We're going to talk about what's happening in the market. At the same time, we're going to talk about what the updates look like. Okay, we'll kick it off. Before I begin, this is something that our legal team has advised that we should definitely have. We're not financial advisors. We are not chartered accountants. We are a company that operates under the 506C regulation of the Securities and Exchange Commission. We raise capital and we manage the assets and we oversee the investments. We're not your financial advisor, so please, whatever I'm talking about here today is my opinion, and opinions are like, you know what, everybody has one, as they say. So please consult your CPA and make your decision. This is the agenda for the call. So we're going to try to keep it short and sweet. I like to keep the calls under an hour, ideally, and leave a little room at the end for a Q&A. We're going to talk about what's happening in 2026. Introduction, which I've done already. Where we headed in 2026. Why Main Street America is a new frontier. And this is something that's very exciting. I'm doing a lot of research on this right now. And therefore, hospitality, why hospitality is the best asset class in 2026. And we'll talk about the update towards the end. Okay? Let's keep it moving. Okay, so I already told you who we are. We have about $110 million in assets under management. We are not a typical real estate company, folks. Okay, we're more of a private equity company. We like businesses. We're entrepreneurs. We like to roll up our sleeves and get in the mud and turn around assets, because that's how you extract value in 2026. So we're not a typical boring real estate company that's building something on land or buying land and dealing with tariffs and dealing with the cost of labor. There's a lot of crazy things happening in the country right now. As you know, people are getting kicked out, and the cost of labor is going up and trade wars and all that. So we're entrepreneurs. We like to get in and turn businesses around. That's why we love hospitality, and that's why we love healthcare. Those are the two sectors that we operate in, okay? So let's talk about what happened in 2025. So 2025 was a resilient year, considering we're coming out of what I like to call a pandemic hangover, a COVID hangover. Even though, I mean, this is a term that I have coined. Feel free to use it. I say COVID hangover because we were drunk on cheap money, on cheap capital, cheap liquidity. Interest rates were really low, and then the rates went up in 2022. All of a sudden, the cost of borrowing money went up really, really high. Everything got, went from really expensive to all of a sudden took a big dump, especially real estate and other commodities like cars and, inflation. It was going crazy, as you know. But now things are slightly under control. Inflation is coming back again because of the tariffs and because of the new administration's aggressive trade policy. This is not a political discussion. This is just an observation of what's happening from an economic point of view, okay? So the inflation is falling. I'm in Texas, as you know, the gas prices, I love it. I wish I had a V8 engine right now. I mean, I do have a V8 engine, but I wish I had more V8 engines so I could enjoy the cheap gas. Recently, I saw $2.10, which was amazing. It was great to see. So inflation is coming down. The Fed has cut the rate 3 times in 2025, 25 basis points each time. I don't want to talk too much about this because we've already talked about it in my last webinar, but I'm talking about what's happening from a macro level. The S&P 500 is going crazy. The stock market is going crazy. As we all know, we're hitting historic highs. There's a new trend right now that everybody's talking about. That's AI and technology. We're not going to bore ourselves with that in this conversation, but we know anytime there's this shiny object syndrome in the stock market, everybody flocks towards security, but only the smart investors, they take the chips off the table when they see that things are going crazy. As a matter of fact, Warren Buffett, one of the greatest investors of our time, he'll be remembered as one of the greatest of all time, we can agree, has a famous saying that, when others are greedy, be fearful, and when others are fearful, be greedy. And he's talking about the masses, and that's the sentiment right now. Everyone's really greedy. The market is very bullish. People are making a lot of money from Nvidia and Tesla and all these companies, Google, Meta. Is there a bubble? I don't know. You can determine that, but I think the numbers speak for themselves, and we'll talk about that in a moment. So nearly 50% of the total market growth in 2025 was driven by the tech and AI sector alone. That should alarm you, okay? There are 10 trillion club companies in the US. I have a joke that I make, and it's most people don't even know how many zeros there are in $1 trillion. Like I would say most people don't know. But we have $1 trillion companies. 10 years ago, $1 trillion was a lot of money. And I remember vividly when Apple became a $1 trillion company, and that was a big deal. Right? Now we got a lot of $1 trillion companies, $10 trillion companies in the US. We got a bunch of others, and we got a few in China. We got one in Taiwan, I believe, the semiconductor company, and Saudi Aramco, the oil producer in Saudi Arabia. So the results are that markets are trading at overinflated valuations. Meanwhile, and we'll talk about that in a second, real estate has already gone through a correction, and now it's recovering. Okay? This is a little visual representation of what these companies look like. Some of these companies at least. There are other companies, of course, that are not mentioned here. Now, at the same time, this is a crazy little graphic. Those people that work in technology or the people that follow the markets a lot will know what this means. There's a bit of a loop happening. Like these tech companies are committing, they're borrowing money, then they're investing money, using borrowed money in other companies, in other tech companies. And that creates a huge sort of a loop ecosystem and a lot of speculation in the market. Again, not financial advice, but this is just what I see that's happening in the market. And you can interpret this how you like. It's from Bloomberg. Okay, so where are we headed in 2026? So the rally may continue, but instability is the theme for 2026. There is a risk of correction in the market. Of course, it's not going to be a crash. I don't think so, at least. It's not going to be like 1999 or 2008. I think we have become a lot better at dealing with market crashes. If you look at what happened in 2022 when the Fed rate went up, there was a dip in the market, but the recovery happened quite fast. Same thing with when Trump became the president, and he had the Liberation Day, as he calls it, when the tariffs were imposed on the entire world effectively. Markets took a big dip, but within a few days, the markets recovered. So there is a risk for correction, but we at Qila, and you, clearly, because you're here with us, we like to be conservative, right? We like to really look at what's happening in the market and be smart, and not be with the masses. We like to be greedy when others are fearful, and we like to be fearful when others are greedy. That's our philosophy. So how is the smart money moving right now? The sophisticated investors like Berkshire Hathaway, Warren Buffett's company, they are trimming their tech exposure and they're moving into real estate because they realize that real estate has already gone through a correction and it is now in a recovery. Real estate is a lagging indicator, folks. So it usually lags a couple of years behind. That's why if you look at what happened in 2008, you may recall that 2008 was a bad year, 2009 was a bad year, 2010 was a bad year for real estate, but 2011 is when things started recovering and the curve started tapering off and started slowly going up. And especially now when the current administration's focus is to really cut the rates as much as possible. You know, the president just recently threatened the chairman of the Federal Reserve, Jerome Powell, with a legal notice for something completely unrelated. You know, they're pressuring him into cutting the Fed rates. And as soon as a new Fed chairman comes in, the likely scenario is we will get some cuts, which means that the real estate sector is going to recover faster. It's going to be a softer, it's going to be a better environment, you know, going down the road. Okay, let's talk about something I'm very excited about, what's happening. This is some exclusive research that I have done, and this is my thesis, okay? You may not agree with it. If you don't, please let me know. I would love to change my mind, and I'd love to tell you what's happening. So from what I've noticed, and I've talked to dozens of investors, I've talked to many investors who've had an exit. You know, the new frontier for making money for capitalism for Wall Street is Main Street. What do I mean by that? I mean, it's not the big banks are not making money just trading and lending with each other. The private equity funds, I mean, they are going heavy into Main Street America, Main Street businesses. They're buying mom and pop stores. They're buying plumbing businesses. They're buying, HVAC companies, mechanic shops, tire shops. They're buying as many small to medium-sized businesses. They're bundling them up and then they're selling them as tradable commodities to each other for a higher valuation. So they're speculating on Main Street businesses, small to medium-sized businesses. There's a huge, inflow of capital into Main Street businesses. And if you look at this chart here, this shows the value of Main Street to Wall Street relative to Wall Street is back at record highs. Okay, so this means there's so much wealth in the country's small and medium-sized businesses and franchise businesses that there's almost as much money there than there is in publicly traded companies. And as you can see, that happens a lot when the money's cheap. QE means quantitative easing, when the Federal Reserve is printing money, okay? So when the era of cheap money comes in, businesses thrive, right? They hire more people, they expand to new markets, they introduce new products, they spend more money on research and development, etc. So going back to the conversation, and I apologize if I digress or if I ramble. Wall Street money is moving into Main Street America. Businesses, small to medium-sized businesses, are more resilient. They're real assets backed by real demand, okay? And they are less crowded than the public markets where everyone's trading. You know, every kid is trading nowadays. It's crazy. When I was a kid, I did not have the opportunity to have Robinhood on my phone. I had to open a brokerage account, log it into my computer, and And nowadays, kids are trading in high school. Kids are trading. It's crazy. So in any case, going back to this, the barrier to entry has been reduced, but the knowledge is the key differentiator. And in today's economy, the stronger the operator, the more money is they're backed by. Like everybody, there's no shortage of capital in the country, is what I'm trying to say. And the smartest investors are jumping to these alternative investments, and which is why you're here today, because we're in hospitality. And I'll explain why what I'm talking about in the next slide. So the case for hospitality in 2026. Why do I believe that hospitality is the best alternative investment or investment class or asset class in 2026? Very simple. Two main reasons, okay? Number one, it has the stability of real estate. It is underwritten like real estate. So the banks look at it like an apartment building or a warehouse or an office building or a house. I mean, not exactly, but brick and mortar. They underwrite it like brick and mortar. They look at the income and the expenses, etc. But they lend you money. You qualify, based on traditional commercial real estate programs. However, it is not really a real estate. It is really a business. It's a franchise business. So people that are here in the call right now and that are working hospitality, you know what I'm talking about. It's a lot of work. You got to have the right staff. You got to have a very friendly front desk person that's always smiling. From the moment the guest comes in until they leave, their experience has to be stellar. It has to be impeccable in order for them to keep coming back and build that brand loyalty. So hotels are franchise businesses. They're no different than a Chick-fil-A or a McDonald's, but not exactly, but you know what I mean. Instead of selling sandwiches, we are renting out the rooms by the night, and we're creating a great guest experience. And while the customer is there, we're trying to make money in other ways, like parking, the bar, or if there's food on the food and beverage on the hotel on site, breakfast bistro, whatever. So that is the beauty of hospitality, that it's a business, that it is in our control. Us as entrepreneurial asset managers, we can roll up our sleeves, we can dig in and create a great guest experience and increase the income of the property, and therefore increase the value of the property. Okay. Other couple of great reasons. The sector is rebounding. So the travel demand remains high, especially in some markets where there's more fundamental demand than others. Okay. In some cities, there are a lot of hotels, and there's no shortage of hotels. But in some markets, it's amazing. Okay. Like we have a couple of hotels in South Texas, in Laredo. They perform exceptionally well. One of them has an average occupancy of 98%. It's booked for the next 2 years. Maybe sometimes a room becomes available. And the reason why is because the Army, the National Guard, is taking 70 rooms in that hotel. So some hotels are better than others, is my point. But travel demand is high, all right? More people are traveling than ever before. People are traveling for leisure. People are traveling for business. And there's a new trend, which I like to talk about, and that is business leisure. So there are a lot of people that are working from their computers, including me. So I don't need to be at an office at any given time. I could be at home. I could be at a hotel. I could be anywhere in the world and do my job. Similarly, there are a lot of people that are traveling and they're having a good time. The wife is in the spa. The kids are by the pool. Dad is upstairs in his room, sending out emails. Then he's joining them later. So this is a new trend that's emerging, which really increases the demand for hospitality. And last but not least, institutional quality. When you're investing or when you're buying a premium franchise product like Marriott or Hilton, that offers the stability of a global demand. Marriott, for example, is the largest hospitality company or hospitality group in the world. There are over 10,000 properties. I believe Hilton is number 2 at 7,000. And then there's IHG, which has 4,000 hotels. It's very big in Europe, especially. But it's a global brand. Okay, it trades like a commodity. There are always buyers out there because it's a premium product. Just like how you may like to stay at a Marriott property because it's amazing. Similarly, people like to invest in a Marriott property because they know the product and they understand what it is. And that's another one of Warren Buffett's philosophies, that invest in what you know and you'll never be disappointed. Simple. Okay, moving on. So a couple of charts to support what I'm saying. So this is, for the year 2024, I believe, this graphic here. Leisure travel accounted for $900 billion in spend in the US, $400 billion for business travel. And if you look at the trends here, we are somewhere around here. Okay, right here. So the travel demand is going up consistently. Okay, domestic and international. Especially, like, there are all these crazy things happening. In 2026, it's as we know, is a 250th anniversary of the founding of the United States. That's a big deal. The World Cup is coming here. I mean, that's a huge deal as well. So there are a lot of external and internal events that happen that drive demand up even more. Okay, moving on. So we already talked about who we are. We're not going to spend too much time talking about us. I don't want to do that. I'd rather leave some time open for a Q&A session, but I'll be happy to send the deck to you, and you can review it. The 4 great things that make us unique: we have a proven track record. We have 110 million in assets under management. We don't have as many hotels as some of the other people out there, but whatever properties we do have, they perform well. And we, because we're not a giant, a big Wall Street behemoth, we can focus on what we got on our plate and give them the attention that they deserve. Okay. Number 2, cash flow first. Our strategy is very simple. We don't like to build anything from scratch. We don't like to buy land and spend years in building that out, or, all that stuff. We only want to acquire discounted properties that are distressed, not physically, but financially. We want to get a good deal. And we want to make sure there's cash flow in the deal, so we can pay our investors. As a matter of fact, that's one of the biggest points for us. Is like, we don't want to bring any deals to our investors unless we're confident that we can pay them a distribution in the first quarter. Okay. Number 3, compliant and democratized. So we are changing the way people invest in alternative investments by giving them access to deals like this. It's through a 506c fund. It's fully compliant. It's regulated. We've all gone through extensive background checks, et cetera, et cetera. And we're changing the way we do that in multiple ways. And one of them is earn more, live better. This is kind of a new tagline that I'm playing with. And if you like it, please give me a thumbs up. But the idea is earn more than you would through other investments. Enjoy the pride of ownership. Okay. And lastly, live better, because we're actually going to be passing on some of the benefits, the hotel ownership benefits, such as the MMP discount, to our investors. So earn a good distribution, enjoy the cash flow, enjoy the experience in working with us, know that your money's safe, and live better. Enjoy the pride of ownership in knowing that you own a fractional piece of a major branded hotel, and travel the world. Go to the Ritz-Carlton, and I'm going to show you some examples in a second of what that discount looks like. Okay, moving on. This is what our team looks like. Our senior leadership team, only the C-suite team. We have other members in the team that we have to update the deck and add those people as well. Our CEO, a very successful entrepreneur who's had multiple exits in his career in different industries, and in real estate, he's done really well. Dr. Pareen Shah, who's our Chief Medical Officer. People ask us, why do we have a Chief Medical Officer? Because more than half of our portfolio is in healthcare. And our healthcare portfolio performs so exceptionally well that it's because of Dr. Shah. He's always watching it like a hawk and working with physicians and nurses and all that stuff. So, and then last but not least, me. I'm the Chief Investment Officer. I come from the world of finance and asset management. And all of us combined, we put this product together to really give value to our investors. Some of our key assets in the portfolio: Laredo Emergency Room. This number has to be updated because in 2025, our ER did $12 million in adjusted EBITDA, which is a very significant number. And this has been confirmed by a quality of earnings report. That brings up the valuation of the ER to north of $60-70 million, because private equity companies, they want to buy it. The Staybridge Suites in Laredo, this is our best performing hotel. This one does exceptionally well because of military and corporate contracts. We have the Courtyard by San Antonio, by the SeaWorld in San Antonio. This is a property that we used to own with other partners, but we just bought it out fully and we're in the process of stabilizing it. We just brought in a new management company to make it better. McAllen Emergency Room, Extended Stay Laredo Hotel. This property is actually being converted to one of the first Hyatt studios in the US. It's a new brand that Hyatt has launched. This one also has a lot of military folks staying there. This is our newest acquisition, and we haven't really done much to announce this, sadly, because we've been so busy, but we're going to be announcing it properly. But this is a new property we just acquired for just shy of $17 million, and this is 2 months ago in November. And then we have some other interesting ideas and projects. One of them is Optimal Wellness and Recovery. It's a very unique recovery and wellness spa for men and women. And this is a brand that's going to be franchised to other operators, and we're expanding it to different states now. We have one in Laredo, we have 2 in the pipeline in Texas, and we have one in the pipeline in California right now. It's an amazing, it's a membership-based healthcare business. Performs exceptionally well in terms of cash flow. And then this is a new ground-up development that we're planning. We never do ground-up development, but we own this land, and we know there's a lot of demand, and we want to build an ER for ourselves. So we just bought extra land around it, and we're building a plaza and doing the ER. So that's the next step there. Anyway, let's talk about the opportunity. How am I doing for time? So I see that I am running pretty, okay, I'm talking too much, so I have to speed it up a little bit. I apologize if it runs a little bit over. But anyway, the opportunity is very simple. We're acquiring this property, which is worth a lot more than $18 million. We're getting it for $10.5 million because it's a bank sale. During that COVID hangover that I talked about, people borrowed a lot of money, and the cost of the debt service went up significantly, and now they cannot afford it. So they're just giving the keys back to the bank, and the banks are not in the business of operating. They're in the business of lending money. So if they have a distressed asset, they just sell it. They clear it off their balance sheets. So that's what's happening here, where we have a great deal, $10.5 million, and it's worth between 17 to 18 million, possibly more, because it's 141 keys and it's a Marriott brand, and it did 4.2 million, just shy of 4.2. It did 4,135,000 in revenue in 2025. So the people that know hotels well, they can tell you on a napkin. They can do a simple napkin math and tell you if it's a good deal or not. Everybody we've spoken to, they agree that we're getting a very, very good deal on this property. We do have to do a PIP, a property improvement plan. It's not due right away. It's due in the next 24 to 36 months, I believe. We originally budgeted $4.5 million, but we believe we can get it done for $2.5 million. So we're being conservative and putting a $3 million number there. One thing you'll notice, we charge no fees of any kind, which is one of the ways that we are changing the industry. Generally speaking, fund managers make money off of fees and profits. In our case, we're not making any fees. It's a pure partnership model. We only earn after our investors earn. Okay. So critical updates that I want to talk about. I already talked about the revenue. I already talked about the PIP. We have secured a very favorable lending for the property at 70% loan to value. And we're also getting a lot of commitments, for this opportunity, because investors, smart investors, they realize that there's instant upside in this property, and their 100,000 is worth more basically the moment they subscribe. Not only are they earning a cash flow, but they're also getting an equity uplift, right? So they're buying into an undervalued asset. So we just got our biggest commitment by a single investor literally last week. And we have now reached 80% of our goal, and we are targeting February 16th as the closing date. Okay. The end result is, because now we're utilizing bank financing and the amount of money that we needed has gone down, and the hotel is profitable. So the IRR has gone from 13% to 18%. Okay. Which is amazing news for some people that were, they were saying like, oh, how come the IRR is not as high? So it is. We always knew that there was a lot of fat, a lot of meat on the bone. But now that we're really approaching the finish line, the closing date, we can confidently announce that we can deliver. We're targeting an 18% IRR for the Class A, for the Class A1 shares. And then the target IRR has gone to 21% for the A2 shares. Now, another update I have is we've actually changed the naming of the share classes. Before it was A and B. B was up to $500,000, and then A was $500,000 or more in investment. But we've actually changed it now to A1 and A2 because all capital in the fund gets the same treatment in terms of in a capital event. So because we were being asked this question, so we've now updated that just for clarity purposes. And yeah, so one interesting thing to note, the deal is in order to build a property like this right now, because of the tariff costs and the labor costs being up, it would cost $200,000 a key to build a property like this in 2026. Plus you have to wait 2 years or 3 years, however long. So we're getting it for $10.5 million at 141 rooms, $200,000 a key. That should bring it up to $28 million. So we're getting it for 40% of replacement cost, and at an $18 million valuation, which is very feasible, by the way, in the current environment. We're getting it at a 60% of the market value. So it's an amazing deal, and it's going to cash flow right away. Just some, I don't want to talk about this too much. I can send you the deck later because we're running short on time, but the location is fantastic. It's an airport property, 5 minutes away from the airport, 1.5 miles, 2 miles away, I believe, 24-hour shuttle service. And San Antonio is the 7th most populous city in the country. It's the largest military city in the country. As a matter of fact, it's nicknamed Military City, USA. Every day, 100 people are becoming residents of San Antonio, okay? So location is fantastic, and the San Antonio airport is undergoing a $2 billion expansion, $2.5 billion expansion right now, which means more flights are gonna come in, more passengers are gonna come in, and airport properties are gonna thrive, okay? This is a high-level summary of where we are, and of course, our investors get access to the MMP discount at 100,000 or more in investment, and we're not factoring in that discount in the actual numbers. But I did add a little line here that shows you if you assumed $2,000 savings a year, that would bump up the IRR to 20% and 22% for the class A2. Okay, I'll send you this, and you've already received the deck. Some of you have received the updated deck, but the numbers to take home are 18% IRR, out of which 8% is a preferred distribution, which is paid every year. It's paid out on a quarterly basis. Okay, so if you're investing 100,000, you can expect a $2,000 check every quarter, making it 8,000, and then you're going to get a one-time capital uplift when we sell or refinance the hotel later on. And for the class A2, $500,000 or more in investment, that is a 10% preferred distribution, which is 10%, 2.5% every quarter, and a one-time capital uplift. So anyway, and then there's a second option that we have. It's not very popular, but some people like it. That's the income note, which is a 2-year hold, and there's no profit share. You get a 10% coupon payment. Very simple, but it's not very popular. I would say maybe 10% of people like this. Most people like the equity option because they get a big upside later on and their money grows significantly. So the Marriott family, if you invested with us, you'd get the MMP rate, which would qualify you to stay at over 10,000 properties around the world in the Marriott Bonvoy family. And that rate is very significant. It's a discount up to 80% off, depending on how well you book and plan your travel, okay? So these are some of the brands in that portfolio. Excuse me. This is what that discount looks like in real life. Before discount, after discount. We're just looking at some properties. So this is the Ritz-Carlton in California, Laguna Niguel, Laguna Beach. $1,172 without the discount, $281 with the discount. Okay? The W in Times Square, $453 without the discount, $257 with the discount. It ranges. The more premium the property, the bigger the discount. Okay? The London Marriott Hotel in County Hall, 613 GBP pounds, 133 with a discount. Okay, this is a real life example that I want to share with you, and I may have texted it to you, some of the people. This is one of our investors who actually invested with us, and for this property specifically, and he was exclusively looking for that MMP discount. He sent me this text message And he sent me these pictures and he said, man, like I'm having so much fun. Like he's living the life, he's a young guy. He was recently in Saint Martin or Aruba, I believe, Saint Martin. So, and now he's in Switzerland, and the property he's staying at is $1,400 a night. And with the discount, he got it for $363 a night. How crazy is that, right? So that's our philosophy: earn more, live better. And that concludes my presentation. Very simple. At this time, I will open the floor to questions that you may have, and please don't be shy. Ask me as many questions as you like, and I'd be happy to answer those for you. There's a little button at the bottom that says Q&A. Just type your questions in there, and I'd be happy to answer your questions. Hope you enjoyed the presentation. We're very excited, obviously. While you're typing or thinking of a question or typing the question, I will say, in terms of timelines, we have reached our milestone to acquire the hotel. We are moving ahead with the acquisition, obviously. But of course, because there's a PIP fund, there's a property improvement plan, that money that we need for the PIP, $3 million. So we'll continue raising until we reach that target, even after the hotel gets purchased and closed. But it's on a first come, first serve basis. We just received one single commitment from an investor for $1.6 million. We have another investor who's considering doing a large allocation. We have a handful of investors that are doing $500,000 or more. We just haven't collected on it yet, on those commitments. But if you're interested, this opportunity is not going to last very long, and it will not be, the next deal may not be as good. I mean, we're going to try our best, certainly. But I think the market is very good right now, very favorable. And this timing, this opening in the market is not going to last very long. The number of good deals are going to slowly disappear. And in this specific hotel, this is more of a loss leader for us. We're not making that much money. If we are making money, it's after we pay everybody, after we pay the investors, and we're making money on the upside when the value of the property goes up. But we have incorporated no fees of any kind in this specific property. We wanted to do that just to give our investors extra value, to give them a great deal, to know that we're not double dipping in any way. But it's very challenging to run a fund and pay for accounting and administration and legal, compliance, marketing, investor relations, operations, everything. So in the future, we may introduce fees in other products. Of course, if you invest in this one, then we have a commitment for 5 years that we cannot just randomly introduce fees. But in future deals, we may introduce fees. Not a lot, but start small. So if you're considering an allocation, this is the perfect time. The market is great. The timing is great. The opportunity is great. And we've verified this independently, and it's just looking superb. So at this time, please, if you have a question, let me know, and I'm here to answer your questions. And if not, we will conclude the call. No questions so far. That means I must have done a great job at the presentation, because usually I get a lot of questions in these calls. So if you don't have any questions, no problem. I hope you have a great evening. Thank you for joining us. And you can, what I will do is I'll drop my calendar link. You may have my number already, but I will drop my number and my calendar link. You can text me or call me anytime, or schedule a call. Okay, that's my number. And let me just get my actual calendar link right now very quickly and drop that in. And feel free to schedule a call with me, a follow-up call to discuss. I'd be happy to walk you through the process. Everything is self-directed. It's very easy. So really, it's very, very simple. We have a portal. You sign up through the portal. We help you through it. We guide you through it. Yeah, no questions, it seems like. Thank you very much for joining me. I love what I do, and I love talking to people, as you can tell. So I apologize if it ran longer than expected, but thank you so much for joining us, and I hope to talk to you, and I hope to have you on board. Have a great evening, and God bless. Bye-bye.